Highlight of the day. First of all, you got to understand that what's important about trading is not being right. It's not being wrong for long. Like kids are wrong for long. And the way they fix it is they go crying to their mommy. So if you have a steep rally that we often say should be respected and you get a retracement and then a subsequent move up, okay, and it's not happening or it doesn't happen, do you wait until down here to say, yeah, it's not going to retrace and rally? That's what a fifth grader would do. They'd be crying down in here. You got to get better at knowing where you're wrong. So you're not all the way down here and then say, yeah, I don't think it's going to come back and then rally from there. Well, no kidding. Fifth grader would say that. Well, we don't wait that long. Generally, there's something that tells you that it's not going to just come back and re-rally. Remember, this is the steep pop that generally will have just a smaller pullback and then the re-rally, right, to continue through some swing highs that they've been laying. Well, right in here, we're gonna blow it up, especially there. We're gonna blow it up down in here, and that's what this bottom chart is. These green lines are icebergs, as Dave depicts them, and they're bigger orders than meets the eye. They're green because they're buy orders. This number right in here, you might not be able to see, you'll have to blow it up, is how many are eventually done. And you could see both of them, this one here, are 300 lots, just pretty big size in the S&P minis, right? It's not so much that you see it, that's important, but it's important to know what the right question to ask. Like if you were expecting it to shoot up from this area right in here, and then you see buyers come in and they are told by the market, oh, you want to buy it? Here you go. Choke on it. That's an appetite for selling. Someone comes in to buy and say, you got it. Here you go. Your recognition, you being able to ask and answer that question is reading order flow, so that you can not necessarily just get short, life is good, and you'll be able to buy it down here, but definitely to change your opinion so you're not the fifth grader saying you're wrong 4 or 5 points lower, saying that, you know what, I don't think it's going to retrace and go back up. And these are things that we say when this is happening. Be careful trying to still get long because there's an appetite for selling. They not only gave this big buyer his fill, but they gave it pretty quickly, and it's pretty big size. That's important, how they give it to them in understanding context. Then we rotate down and do in fact get bearish. You got big red squares, which are big sellers, big sellers, big sellers. Do you see the difference between the big sellers that come in here and the market kind of goes lower, doesn't get above where the big sellers came in, and then at some point they got big seller, and they start to nose above it. And that's where Dave seen that there might be, and this is all trading is, probability, there might be selling that is getting absorbed and does the opposite of this example. Selling now gets lifted, and there's an appetite for absorption down in here. When big sell orders can't slide the market lower like they normally should. A lot of selling should make price go down in the price of anything. When it doesn't is the clue. And Dave had a head scratch moment. He was already bullish, and then he seen the deer, pull the trigger. What are you waiting for? When I say bullish, he was already looking for a reason to buy it down in here based on a previous market action prior. And then he gets his win moment with not only that, but then you get an iceberg that quickly gets filled. And it's like, this is probable. And it's all about what you want to see after you're in a trade, what you want to see to get you in the trade. You always don't know the exact damn price that you want to buy or sell way before it gets there. So if you're looking to buy a market and price is going down, well, it's 19 even, I want to buy. You know that when it's trading at 29 even? Yeah. No, it's around 19 even you want to buy. You don't know the exact price until you're able to do a little real-time analysis once it gets down to your area. All right? Because if you're not incorporating real-time something in to qualify, that exact price could be awesome, but you're going to miss a lot of the winners and catch all the losers. So if 19 evens is super important for you, and I'm just using that for example sake, and that's the most important price as it's coming down, when it's a winner, sometimes it does that, doesn't fill your price. So yeah, it worked. That was a great spot, but you're not on the team. You have no money to show for it. But that son of a gun doesn't work. Bam, you get filled all right, and it continues on down. So you catch 100% of the losers, and you miss a lot of the winners. That's a frustrating, and then you blame the strategy. It's not the strategy, is you have to add some qualification. And that's where the skill comes in. There's two things that people are weak at: executing their trades with something that's creating probability in real time, and then themselves. Those are two weaknesses in this business. Someone came in the comments section on these YouTube videos and said the channel should have more followers. So subscribe. Let's get over 1,000. But that's the goal. I think we're at 750 or 800 at the time of this taping. But what's important is the understanding of reading order flow in real time to make these decisions, calls, ideas. And when we're wrong, you're not wrong forever. Stay healthy, stay safe, and subscribe.